morning. Welcome, everyone. Thank you for being here with us today. The Arc of California is thrilled to offer Caring Futures, a proven resource program dedicated to supporting caregivers and family members of adults with disabilities. Understanding the unique challenges faced by family caregivers as they age, Caring Futures offers critical planning assistance, resources, and a supportive community. Caring Conversations is just one part of the Caring Futures program here at the Arc of California. We will share more about our other offerings by Caring Futures at the end of today's conversation, so please stay tuned. If you need closed captioning, please click the button in the bar below. At the end of today's conversation, there will be a question and answer session. At that time, we'll invite you to raise your hand or type your question in the Q&A to ask our guests directly. Hello, everyone. In case you haven't met me before in previous Caring Conversations, my name is Felisa Strickland. I'm a sole parent caregiver for my daughter, Lily. Lily is 25 years old. She has a diagnosis of cerebral palsy, autism, epilepsy, and IDD, and she requires full-time care. We enjoy our challenging and fun life in Santa Barbara, California. Alongside full-time caregiver, I'm a strong advocate for individuals with disabilities and their families. I serve as a board member for the Arc of California, as well as Alpha Resource Center of Santa Barbara. I also participate on many committees and enjoy getting involved in fundraisers and advocacy projects in our community. As a parent, Caring Futures instructor, and a parent educator, I am thrilled to be here with you for this important conversation with our special guest. Today's topic is working while on public benefits, what people with disabilities need to know. Joining us today is Michele Fuller. Michele is an attorney, advocate, and trustee who has spent her career helping families protect and plan for loved ones with disabilities. She is the founder of Fuller Special Needs Law, a division of Michigan Law Center. She is also the president and CEO of Advocacy, Inc., a nonprofit organization that serves as trustee for special needs and settlement trusts across the country. Michele's work focuses on helping families navigate complex decisions with clarity, compassion, and long-term perspective, especially when planning involves uncertainty about a child's future independence and support needs. She has worked with families for decades, often guiding them through the transition from crisis planning to sustainable, lifelong support. She is a nationally recognized speaker and author on special needs trusts and trust administration, and has written several widely used books for families and professionals on protecting a child's financial future. Please welcome Michele Fuller. Good
Thank
morning,
you.
Michele.
Good morning. Thank you for having me.
Thank you for being here. So excited about this conversation. This topic always comes up when we're teaching our Futures Now planning classes. So after I saw, just that you were an expert on this topic, after we met with your husband Kevin, he said, "Oh, I've got just the speaker for that topic." So thank you for joining us today. I know everyone's really going to enjoy the presentation that you've prepared, and some great takeaways for after this conversation as well. Before we dive in, would you give us a little bit of history as to what got you into this type of work, and then we'll let you take it away.
Sure. Well, thank you. It's a delight to be here. And I would say that I have been practicing this, special needs planning for almost 30 years now, which is crazy to me, that it's been that long. But I was fortunate enough to work for an attorney who was already doing this planning, and this was before the federal law came into existence in 1993. And so I know it sounds ancient history every time you go through the grocery store and you see the date by which somebody can purchase alcohol, and it's a little shocking that it just seems like it happened yesterday. But long story short, that's how I got into this, and it's always been an interest. I'm the mother of four children, and my second child, my oldest daughter, has autism, and so my life was based in Michigan. My practice is still based there, but I met a California attorney, Kevin Urbach, and so we fell in love, got married, and my daughter is a resident of California and receives a lot of services. So what we're going to talk about today is something that's really near and dear to my heart because I do this reporting, and these are the tools that I have learned not because of any continuing education, but literally boots on the ground How do I report? How do I encourage my daughter to have a life of purpose? And so these are the necessary tools to be able to maintain public benefits, and depends on, the individual's capability. Is this a transition to full-time work? Is this, and public benefits are a safety net, or if it's really an expression of purpose and they will never be able to transition off of public benefits. Either way, being able to have confidence that someone can work while maintaining their public benefits is huge. I ran into a surprising amount of resistance by encouraging her to work through some of the agencies that were supporting her ILS workers. They didn't know that you could work while being on SSI. And so this is where families, I think, and individuals who would like to work, they need the tools and information to be able to counter that resistance with confidence. And so hopefully that's where people are left today after our discussion.
Oh, that sounds great. Well, let's go.
All right.
I'm going to give you the floor and let's see what you got.
Fantastic. So I assume there's going to be questions, which is fine. I'm going to play this as there we go. Let's see. Are you seeing the right screen,
Yeah.
Felisa? Okay,
hmm
perfect. Excellent. So today, this is really focused on SSI eligibility, and we'll go
Can I stop
through.
you real quick, Michelle? Are you
Yeah.
able to turn off the captioning
Oh, I sure am.
if it's easy?
Yeah, there we go.
Okay,
That's
thank you.
better. Sure. No, thank you for that. And so I think Felisa mentioned, or it was in the chat, if you have questions, please put them in the Q&A. I would like to be able to get through the materials. So a lot of times questions will pop up that are answered later in the materials. But of course, I can't wait for your questions at the end. I'm really excited to do this with you today. And so what we're going to talk about is, first, there's a lot of fear around working while on SSI. And so I want to counter that and make sure that today I hope to leave you with confidence. And that is the best thing that you can do, is no bad things won't happen or are preventable as long as you know the rules and how to work around them. And so this is something I confront all the time. My child has an opportunity to work, but they're not going to work because I'm afraid that they're going to lose their benefits. I think it's really important for everyone to live a life of purpose. And it doesn't matter what that job looks like, what gets you up in the morning, what allows you to be a part of the community. People, no matter what their disability or challenges, have something to offer. If it's love and companionship, that is enough. And it's okay. It might be a volunteer, but it might be paid work. So we'll go through some of that today. The fear is complete, it is real, and it is not just in the individual or the families. As I said earlier, this is something that advocacy groups, independent, living support, IHSS workers, they don't know. There's not a lot of training or support out for this particular area of working while on SSI. And so the lessons that I share today are ones that I learned myself in order to support my daughter. And so I want you to know that, yes, you can work while you're on SSI. Absolutely. The key today is that you feel safe doing it. So first, let's work through a couple of myths. One is that if you start working, your SSI automatically just stops. That is utterly untrue. What happens is that we'll go through the calculations, but exactly what happens once you start working, and you will know exactly how to report it and what will happen. Your SSI depends on the amount that you're working, the hourly wage that you're working at, and it tends to go up and down unless you have a salary or set hours where you know exactly what you're making. And so it doesn't just end, there's a process, right? Then the myth that I can't earn over $2,000. This is probably the most common rule that I hear. And what it is a complete misunderstanding or a misapplication of the rules. $2,000 is the resource limit. That is how much you can actually have in your bank account. That has nothing to do with income. That is completely separate. So I do hear that confusion, because these SSI rules are complicated. It's one of the most complex pieces of legislation that exists. So, and, they didn't name these things in a way that, SSI, SSD, Medicare, Medicaid, it all sounds the same. And so it's an easy point of confusion. But let's be clear, $2,000 is the resource limit, not an income limit. Okay. The third is that I can't freelance or sell things. Totally untrue. I've had clients who are authors, artists who sell their work, royalties. People with disabilities have just like everybody else. They are just like everybody else. And I know I'm preaching to the converted here, but they have talents that should be explored and leaned into. But how do they do it in a safe way? Well, we'll talk about that today. You absolutely can be self-employed. You just have to know how the rules apply and how to safely work within them. The other and the final one that we'll go through today is that if I lose, if I work, I'll lose Medicaid. I can't earn anything. Nope, that's not true. And we'll go through the 1619B rules as well. So here's the roadmap for today. One, we're going to just take a brief overview of how SSI works and the different types of income. We'll do some math together. I don't do math in public unless it's prearranged. We'll talk about how to protect your SSI benefits, explore some resources to be able to help, and then go through a scenario. So, how does SSI actually work? And let's do a quick refresher. First, there's something called the federal benefit rate. That is the maximum rate that you can get under SSI. SSI is income, right? That is when you cannot work to support yourself through either mental or physical impairments, which prevents you from earning enough to, it's called substantial gainful activity. That is the threshold. Can you perform substantial and gainful activity? And if the answer is no, then you qualify for SSI. And so that maximum federal benefit rate this year in 2026 is $994. However, in many states do supplement that amount. And so that isn't considered income. It doesn't reduce your federal benefit rate. So in California, that rate is quite substantial. Same with New York, Hawaii, because those states are more expensive to live in. So we're going to concentrate, though, on the federal benefit rate because I want this to apply to as many people as possible. And so the resource limit, again, is $2,000. And this is the maximum rate that everyone kind of starts with. Now, there are different ways to reduce your SSI. So if you aren't receiving or your loved one isn't receiving $994 per month as the federal benefit rate, we have to ask why. So one of the things that was brought up in our discussion is if you're receiving less than that, this might be why. There are different types of Social Security income, or specifically how Social Security determines what income is what. And it is completely different from, this is the end of March. We're all getting ready to file our income taxes with the IRS. IRS income and how the Internal Revenue Service determines what type of income you have is completely different from SSA or Social Security income. The first, what we're going to talk about the most today is earned income, of course. And if that means anything that you do that's considered work that results in payment. And it could be W-2 income or salary, hourly work, or it could be for royalties, right? If you're self-employed, it could be consulting fees. It could be any number of types of things, but there is work exchanged for money. The other is unearned income. Unearned income has the most drastic impact on SSI because that is money that is just distributed to a person that they didn't work for. This could be a gift. It could be an unplanned for inheritance. It could be, I see that most frequently. And the other is a lawsuit recovery, which I deal with quite a bit in my practice, my law practice. The other two types are deemed income and in-kind support, which we won't spend any time on today. But deemed income is where someone has an obligation of support for another. And there's only two instances where that happens, and that is between spouses and a parent to a minor child. And so that's where, when they're looking at one person's eligibility for financial eligibility, they look to the person who has the obligation of supporting the claimant and look at their income and resources to determine whether that individual qualifies. Again, this is only for minor children or spouses. In-kind support, that's why sometimes people only get 665 or somewhere in the 650 range for SSI, because they are living in a household with someone who's providing shelter without rent. And so if that is happening, the easy counter to that is have a rental agreement, charge them rent, allow them to get the full benefit of that federal benefit rate and maximize their SSI. And so what we're going to concentrate on is earned income. So here's a contrast between the difference in how Social Security interprets or treats earned income versus unearned income. So the system is designed to reward people for working. So let's start with unearned income. When someone receives a gift, let's just say they were left the beneficiary on a life insurance policy. I see that all the time. So what happens is the month that you receive that income, Social Security, you have to report it by the 10th day of the following month. So right now we're in the month of March. If you receive that $10,000 life insurance policy at any time during the month of March, you must report that to Social Security by April 10th. And so what happens is that Social Security reduces your SSI dollar for dollar after the first $20 are disregarded. So that's called a general disregard, a general exception. So if somebody gives you $20 worth of lottery tickets, $20 gift card, nothing happens. Okay. After that, it's a dollar for dollar reduction until the benefit is gone. Now that's on the income side. On the earned income side, not totally different, but much different. So what happens is that there's a general income exclusion of $20. Then they exclude the next $65 of earned income. After that, it's a 50-cent reduction for every dollar earned. So basically 50% after the first $85. So we're going to do some math together to talk about that. This is one of the things that we were talking about with Felisa, is that talking about math is difficult. It's difficult for me to picture, it's difficult for me to convey. I always like having a math be explained in an example. So much easier. And so here's the formula we talked about. You start with your gross wages, not your net, your gross wages, before taxes are withheld. Then there's a general exclusion of $20, and then $65 disregard, and then you divide by 2. So it's a lot of math. This is where most people who are working, depending on their disabilities, may need support doing this math and the reporting every month. And so here's a real example. So someone earns $855 during the course of a month. So how does the math work? Well, if they've earned $855, then you apply the general income exclusion for $20. That brings us down to $835. So SSA ignores the first $20 of any income regardless of its source. Then, because it's earned income, there's an additional $65 reduction. And then what's left is $770, and you divide by 2. So $385 that's left, that's what you subtract from the $994 federal benefit rate. That is your reduction. It's not a penalty, it's a reduction of your SSI because of your earned income. But let's do the math. Where does that person end up at the end of the month? Instead of just relying on the 994, they've worked and now their total income for the month is it's almost $1,500. And so you end up ahead, right? There's no impact, but after earning $855, there's only a $385 reduction. And there's a way to further reduce the impact on your SSI. And that is called IRWEs for short. You know the government. We speak in acronyms, right? So IRWEs are impairment related work expenses. And so let's take that apart. Knowing that that exists is just like when you report your income taxes to the IRS, it's deductions to be able to pay less tax. Here, these are reductions to reduce the impact or reductions of your SSI. This is critical to someone's success for working. Why? So let's take this apart. Impairment related. So the expense has to be related to your disability, not just a work expense. So like if you need tools or special clothing or uniforms or anything related to your work, that is not what reduces your income here. It must be impairment related. 2, it must be necessary for you to work so that without this expense, you couldn't do your job. 3, it has to be paid out of pocket by the individual, by the SSI claimant. So here's some really easy, like very common expenses for reductions. 1, take a look at the transportation. If you're in California, it could be your Clipper card expense. It could be your BART expense, which is the same thing. It could be if you can't rely on that to get to work on time. It could be an Uber or Lyft expense. It could be a driver that you're privately paying. As long as you have a receipt, you're good. Prescriptions needed for work. So if you need medication to help you focus, medication to help make sure that you are seizure-free, any of those types of things, including supplements, but it has to be related to your disability, not just general health. Those are legitimate expenses to help reduce, it counts as an IRWE. Certainly therapy or counseling, adaptive equipment, job coaching, any kind of service animal and their related expenses for their upkeep are all eligible for reductions as an IRWE. Certainly attendant care services, personal care services to help you get up on time and ready for work, all eligible. And certainly medical devices. And so those are just some of the most common things, what I call low-hanging fruit. Go after those. And all of those expenses are direct deductions from earned income. So it's worth exploring here just because I see this so often that there's a $2,000 resource limit. This means money, cash on hand, right, that you own. That is a resource. So that is different from income. And you have to watch and make sure that that your loved one or yourself, if you're a person with disabilities, that you're not accumulating money more than $2,000 in your bank account. So there's other exempt resources. If you find yourself coming up against, getting over that amount of money. And so this is really important that Social Security measures resources on the first of every month. So that means that if you're over during the course of the month, but as long as you're below $2,000 on the first of the month, very, very important to make sure that you're below $2,000 by the first of every month. So if you're over a little bit during the course of the month, that's okay, as long as it's spent down. The other assets that are exempt from Social Security, being countable for Social Security, is a home, one vehicle, a prepaid burial contract, a special needs trust, right, which I love that, and an ABLE account. Now, as far as the wage or the income formula, where we've got gross wages less $85, and then half of whatever is left. However much you earn from work, that reduces your SSI check. So once you get to that calculation, so where does this IRWE calculation happen? It's after the gross wages, but before the $85. Okay, so it's what are the countable wages? That is what an IRWE will reduce. Okay, and so let's go to the next one. How much can you earn? What is the threshold before you really start losing your SSI? That is where the end result of after all those calculations has to be below 1690 in 2026. Now, this number gets increased slightly every year. And I do realize and agree that that number is extraordinarily low. And as I mentioned, I have a daughter with disabilities and she does work. And so this is how I learned these rules because I had to help her. And I will say that most attorneys and advocacy groups don't know how to do these calculations unless they are responsible for the reporting. And so this is why doing these types of seminars and education is so important. And so this is the threshold. This 1690 number is your threshold for what is considered by Social Security substantial gainful activity. And it doesn't matter what state you are in, this is your threshold. Is that fair? I would say no, because this standard being applied in, say, Oklahoma is different and has a different impact than if they're applying that standard in California or New York, where the wages tend to be higher because of the cost of living. Regardless, that is your threshold. And so what I would say is that it's important not to hover above this threshold. I think that you either want to stay below this threshold, this is my opinion, or you want to blow it out of the water. So if your child or yourself and you're earning 1750, ooh, this might be a point of advocacy, which is something that I often talk about, where instead of increasing your wages 50 cents an hour, 25 cents an hour, stay where you're at or reduce your hours slightly and talk to the employer about issuing a bonus instead of a raise. There are ways around that. So dealing with a one-time bonus is different than dealing with this on a consistent level where you're going to blow your benefit and all of a sudden now you're collecting substantial gainful activity and now you're no longer eligible. And so, however, if you are earning, something that really does blow this out of the water, but health insurance is not available to you under a really critical section, 1619B, you are able to keep your Medicaid benefit. And we'll go through that a little bit. Again, we're focused on SSI here. SSD or DAC benefits, CDB benefits, if you're an adult child of a person with disability, if you're a person with disabilities started before age 22 and you're transitioned to your parents' work record for benefits, this is different. It works a little differently. And so that's why we're just concentrating on SSI eligibility today. So let's talk about different ways that you can keep your benefits and points of advocacy. One is, again, that 1619B. There are conditions in order for you to maintain your eligibility for Medicaid. And this is a different bucket of resources. And so if you think of Medicaid, Medicaid is a huge benefit. It's a federal benefit that is administered by the state. And each state has its own contract with the federal government as to how that state is going to administer Medicaid benefits. And I would encourage you, think of Medicaid as an office building with many floors. Each floor has a different function. So one floor might be Medicaid for health insurance. Another floor might be Medicaid for something like PACE benefits, where it has its own income and asset rules. It has its own application process. Another one might be for independent living and caregiving in home. Different, we call them waiver, home and community-based services. Every state has their own name for that, but it's a similar program, again, with its own rules. So Social Security and Medicaid can get very complicated. And so this is partly why you have to look at this and go, okay, under the federal law, under 1619B, as long as you are eligible for SSI for at least 1 month, you still meet the disability requirements. But again, you've out earned the SGA, right? And this is where you meet all non-disability SSI requirements except income, meaning you're under $2,000 in countable resources. You need Medicaid to continue working because it may pay for in-home caregiving. It may pay for that helps get you ready and out the door for work. It might be transportation services. It might be any of the myriad of Medicaid benefits available to you that you need in order to continue working. And your earnings fall under your state's threshold. So every state has its own threshold. And I can supply the link for that. And it's actually pretty easy if you just Google it. Otherwise, I'm happy to supply the link for that. In California, that threshold is quite high. This is where you see a huge differential between the states. In California, it's just over $66,000. It's $66,078. If you earn more than that, then you don't get Medicaid under this program. You might get it under a different program. But under this program, if you earn more than that in California, $66,078, then you can't get Medicaid at this program. Again, in Michigan, it's only $42,000. So that is where you see the differential between the states. If you find yourself going over that $2,000 asset threshold, that resource on the first of the month you're going to be going over, this is where an ABLE account is a key resource for people. This is one of my favorite things and one of the most important tools that we have as special needs planning attorneys in our tool belt to help our clients. This came about in 2018 under President Obama. This stands for legislation called Achieving a Better Life Experience. It's also called 529A. That is the part of the legislation that enumerates what the rules are for an ABLE account. So what are the rules? One, it's an exempt resource. That means in plain English, Social Security and the Medicaid programs cannot consider it as part of financial eligibility. It is not a countable resource. It helps you stay below that $2,000 threshold. And so when do you get into the danger zone? For SSI recipients, if your account becomes more than over $100,000, your eligibility is not terminated. It is simply suspended until that account gets under $100,000. There are other ways you can either spend that money down, or you can then fund a first-party special needs trust. Could be a pooled trust or a standalone D4A trust. Sorry if I just spoke Greek to you. That might be another session. There are limits as to how much you can put into this account every year. Anyone can have an ABLE account that meets this criteria, where they had to become disabled prior to age 46. That increased to age 46 this year. It was in prior years age 26. So if you've looked at this in the past and said, well, I don't qualify, look at it again, because you may qualify now if you became disabled after age 26, but before 46. Here's a bit of controversy, which is how much can you contribute every year? The amount that you can contribute is inexplicably tied to the annual gift tax exclusion. I have no idea why they did that, but they did, the federal government and the planners. So last year, that amount was $19,000. And what's confusing is that when the regulations came out for ABLE accounts, the IRS said that you can contribute up to $20,000. They didn't tie it to the amount. The limit for an ABLE contribution wasn't tied to the gift tax exclusion. They calculated it differently and made it $20,000. But when the POMS regs came out for 2026, they said it was $19,000 because they just went by the gift tax exclusion, which did not increase from last year to this year. So what is the amount that you can put in? Well, I would try and put in $20,000 and see if it's rejected by your ABLE account, to be perfectly honest. I think they will straighten it out, but right now it's a little bit of a weird point of contention. And so the magic here, though, is that if you are earning more than, you're going to run over the $2,000 resource limit, if it's earned income, that individual who's working can put in an additional $15,650 every year. And so that is over and above the $19,000 or $20,000 limit, contribution limit, which is fantastic. The other limitation is that an individual can only have one ABLE account. So there you go. ABLE accounts are a phenomenal tool, and it really allows a person with disabilities a great deal of agency and empowerment to be able to spend and manage their own assets, which I love that. So here is an incredibly important obligation, is the monthly reporting. So again, you have to report it ideally by the 10th day of the following month. You don't want to go a whole lot over that. If there are some complications, you have to get that amount, this reporting in as soon as possible. What are you reporting? You're reporting pay stubs for the previous month. So we're in the month of March right now. You would be reporting February income, hopefully no later than the 10th of March. The other thing that you have to report is IRWEs, not just the amounts, but the proof and documentation of spending, which is receipts. It can be screenshots. And there is a function, for instance, my daughter uses Uber or Lyft to get to work every day. And so there's a way to log into the app and be able to download all of those expenses as a form of a receipt. People may need a little help doing this. My daughter is able to do it on her own. Not everyone is, but that is a huge thing to know how to do and be able to make sure that you're keeping very good records. The other is, of course, your name and social security number. So there's different ways. So those are the things you have to report. One is the copy of all your pay stubs, which reports your gross income, your IRWE receipts, and I've also included a checklist and a calculator. So we'll talk about that in a moment. How do you know what to report? So again, this is something that we have created through advocacy and my law firm, which is an IRWE guide and checklist and a reporting guide. That is part of your materials. And I would encourage you to take a look at that and say, oh, does it qualify? Doesn't it qualify? And if you're at all on the fence, I say add it in. If it's arguable, if you can argue that it meets the 3 criteria to count as an IRWE, include it. The other is there is an IRWE, there's a SSI income calculator for you. It's an Excel spreadsheet, but it does all the calculations for you. Anything that will help make this reporting easier. I always like, anytime I'm reporting anything to Social Security, to make it as easy as possible for that caseworker to look at what you've reported and say yes. So what do you report, or how do you report it? So we talked about what you report, and I would include that IRWE, that SSI income calculator, and feel free to use that Excel spreadsheet. So how do you report? If you haven't done so, log into ssa.gov, create an online portal, and the best thing that you can do is invest in a scanner, because you need to be able to upload. That is the easiest way to do it, is upload it into the portal. If you are a representative payee for someone, you can add them to your own profile on ssa.gov, and you just log in to theirs. That is the easiest and most consistent way to report all of this information every month. You can also fax it to your local office. That is incredibly effective. Any UPS store, any office supply store will have a fax machine, or get one yourself. And also make sure you keep the proof that the transmission went through. That is incredibly important, to make sure that you're keeping that for your own records. Last but not least, there's certified mail. That is my least favorite, because it is not unusual for Social Security to lose things. I've been asked no less than 5 to 7 times for the same information over and over in the same case. So they just consistently lose things. it's a little better since COVID, frankly, but I would really focus either on a scan and upload to the SSA portal or a fax. Those are far more effective. And please make sure that you're trying to stick to that deadline. I'm not going to tell you that is a hard and fast deadline. Practically speaking, if you're right around the 10 days, um, I wouldn't consistently blow that, but better in is than not turning it in. So if you're like, oh, it's the 20th of the month, uh-oh, and I haven't done it, still turn it in. There might be some consequences, there might not be, but make sure you're setting a deadline, a calendar, reminders, alarms, anything that you need to do to help make sure that you're either supporting that person with disabilities and helping them report, or if you are a person with disabilities, making sure that you're doing what you need to do to report. So here's how to get some help. One is Ticket to Work. This is a great program. And if you haven't found a job, if you are thinking about working, you want to explore how that looks, what that looks like, what kind of job you could get, this is your first stop, right? And so they have career counseling, they have job coaches. They want to, the people at Social Security, and particularly the people that work in this program, are there to help people enter the workforce to the extent that they are able to and live a life of purpose. And there's a lot of help available there. And I have to tell you, I was pretty astounded by some of the advocacy groups that didn't know that this existed or how to tap into assistance. This is key. They have a free benefits counselor called WIPA for short, or Work Incentives Planning and Assistance. If you're not quite sure what program that you need, this is a specialist that will sit down with you and help determine what is the best program that fits your needs, what type of assistance you need, and help even with the application process. And so the criteria is that you have to be at least 14 years old. You have to be determined to be a person with disabilities, so receiving or qualified for SSI or SSD. And you have to either be considering work. It's okay if you're already working, or if you're in school training and you're looking for a transition plan. This is key free resources available to you. There's also something called a PASS account, or Plan to Achieve Self-Support. This is really well suited for people who are more entrepreneurial, people who want to start their own business. Now, I will warn you, I've looked at the application and it is a 16-page process that requires a full business plan. This is where you lean into that WIPA counselor to help you prepare that document and submit it every year. This is a great plan for people who are entrepreneurial, artists, musicians, authors, anything that you want to start your own, right? Or things that are traditionally a 1099 type of income. My daughter is a licensed hairdresser in the state of California, and this is a great plan for her. How do you access? It starts with calling the Ticket to Work hotline, make an appointment. That is exactly where it starts. And then there's also lots of resources, and I've included the websites here. So let's look at a couple real life scenarios very quickly because I do want to make sure that we have some time for your questions. So here's Jada. Jada is working 15 hours a week at CVS, and she's a student. She's 20 years old, and she is still in school. Her monthly income, her gross income, is $600 per month. She lives at home with her mom and attends high school 5 days a week. She's still in school. So what happens? Because she is a student and she's under the age of 22, she qualifies for something called the Student Earned Income Exclusion. And it lets her exclude up to $2,350 per month. Those are the numbers for 2026 from her earned income. And so it's completely excluded. And so for Jada, she gets to keep her SSI of $994, assuming she pays rent to her mom, right? Because we said she was living at home with mom. Assuming she maximizes that and her SSI is $994, and then you add in the $600 a month that she earns from CVS, now her income is closer to $1,500 per month. without reducing her SSI. That is the treasure of the student earned income exclusion. And so if you have a student, if you have a child who is qualified for that, but maybe you've held back because you're afraid of the impact, you've held them back from working, please go ahead. This is your green light to experiment with that. And it's a great time to allow them to experiment with being able to work, meet friends, make their own community, and fail with a safety net. You are their safety net. And it's a lot of points of advocacy. It could be confronting some behaviors, being overly friendly. You get to see where their challenges are and help them through that and fail safely. Because if they're not failing at something, failing is a dirty word. I think that if you aren't failing, you aren't learning. And so it's a learning opportunity. And it's a good way to encourage them to do that. What happens though if Jada's over 22 and no longer qualifies for that student earned income exception? Well, let's take a look at what would happen with her SSI. So first, we reduce the $600 by the earned income exclusion, right? The $20 general exclusion plus the $65 earned income exclusion for an $85 reduction. So now her countable income is $515. We divide that by 2, and that makes $257.50 countable. That is the amount that reduces her $994. And so that means that her earned income is $736.50. Now, we haven't applied any IRWEs, have we? She may not have any. But that is the impact if you are no longer a student. So now we're going to look at Carlos. Carlos is entrepreneurial. He sells custom t-shirts online. He is 25, so it doesn't count for that student earned income exclusion. He's self-employed. His gross revenue is $2,500 per month. He has $1,000 of business expenses that are reducing that countable income. He is on SSI, Medicaid, and Section 8. So he lives alone, lives independently. So let's look at the math. His net self-employment income is $1,500 a month because he has business expenses that reduce that. He has IRWEs for a total of $900 per month. This is just an example, but some of the things that might add up to that amount might be transportation, certainly job coaches. Now, this is when you're paying independently for job coaching, medication, therapy, any of that. And for him, in this example, it adds up to $900. So his countable earned income, before we even do any impact calculations, his countable income that we are even starting with is $600, the same as Jada in the last example. So the math works out the same, that the actual countable, reduction to his SSI is only $257.50. And so you can see the highlight before and after with that. When you count and you look for IRWEs or you don't, makes a huge impact. And so it makes a huge impact in his disposable income and whether he can afford to live on his own or not. Now, I will say one thing I want to highlight here is that Carlos is also on Section 8 benefits. And when you are doing either an initial application or since he's already on the benefits, that annual renewal, recertification of the benefit and recertification of what his income is, what his rental obligation is, look for opportunities. That renewal also calls for a lot of the same possible reductions that are IRWEs. They aren't IRWEs when they're not called that when you're applying for a Section 8 or recertifying Section 8, but there are a lot of categories that allow for reduced income, reduced countable income, which will then reduce his rental obligation. So there's multiple points of advocacy here. And again, that is consistently missed. So just to wrap up, just to anchor where we're at, these are some really common pitfalls. One is forgetting to report your income on time every month. 2, leaving resources in your bank account. Having more than $2,000 in that bank account on the first of the month. Really, it's critical to make sure that you're not exceeding that resource limit. again, of $2,000. Number three, keeping good records. You have to keep the receipts. You can spend the money, but if you can't prove that you did, it doesn't count. So making sure that you are documenting and looking for opportunities for IRWEs or impairment related work expenses. For confusing that resource limit with an income limit, $2,000 is how much you can have your bank account, not how much you can earn, right? Don't confuse those things. And last but not least, asking for help. If you need help reporting this, if you need help calculating and figuring this out, asking for help. Call Ticket to Work. There's a lot of resources available to assist with this. And last but not least, this is not on the list and it should be, which is if you get a negative or if you get an interpretation or a letter from Social Security that you believe is incorrect, challenge it. So the biggest myth and pitfall is to assume that Social Security is correct. I think in the years that my daughter has been on SSI, which is she's 26 now, she will be 26 soon. She's been on SSI since she turned 18. I have been in an appeal or a challenge for SSI determination, I think almost every year. And so one of the biggest things that I see is that when you get some sort of response from Social Security, look at it critically. And I always, frankly, assume that they're wrong. And so that's one of my top tips. And so your next steps, your action items this week is if you haven't done so, create that SSA.gov account for yourself. And if you are a rep payee for someone, add them to your profile. 2, call that Ticket for Work helpline. That is an incredibly valuable resource. And 3, if you haven't established an ABLE account for yourself or for a loved one, do so. That is a great place to be able to put money for, let's say, Christmas or special occasions, birthdays. And critically, that also has an investment platform. And any money that is in that ABLE account gets to grow tax-free. And we talked about the SSI limits there are $100,000. You can grow that account to $100,000 before it begins to impact SSI eligibility. And if you're no longer on SSI, if you're on SSD or a DAC and you're on Medicaid only, the limits are much higher. They're in the $500,000 range, which varies state to state. So that ABLE account criteria is really worth taking a look at. So now I'd love to open it up for questions.
Thank
I'm
you,
going to stop
Michele.
sharing. Sure.
Oh my goodness, you just gave us so much great information and good news, everybody. You will get, if you registered for this webinar today, you will get a copy of that presentation along with some other fabulous links that Michele's going to share with us. Before we do questions, I just want to remind everybody that we do have our Future is Now planning class. That is a wonderful class that helps you design and support a plan for you and your adult family member. And we do cover work and all kinds of other things in that class as well. We also have self-paced classes for that, as well as a self-care matters class, which is well-being for the caregiver, another wonderful class that we offer. So both of those classes can be accessed through our Caring Futures website, which is caringfutures.org, and you can also join our mailing list there and keep up to date on other offerings and classes, as well as join our Facebook group. That's another place. We have a private Facebook group for caregivers and parents to be able to access other parents and learn and inspire each other. It's a wonderful community. So you can also join that through our Caring Futures website as well. Now, let's answer some questions. It looks like we have about 9 questions so far in our Q&A. And if you're able, are you able to see them, Michele?
I am.
Okay,
I am.
great. So I'm going to let you, because, and just so everyone knows, we are willing to go over a little bit for Q&A, but if you need to leave, I understand. But I didn't want to miss out on Michele giving us that wonderful presentation today. So if you have a question, please put it in the Q&A and then we'll do our best to get them answered. So I'll let you go ahead and kind of pick and choose the ones that you feel like might impact everybody.
I will try and take these in order as much as possible.
Okay.
So first, let's start with SW. I would be interested in your comments on working well on SSDI. Somebody is a CDB or a childhood disabled beneficiary, also known as DAC. We have employer subsidy, special conditions or accommodations, medically necessary therapies with doctor's letters, IRWEs, and yet SSA has deemed my son exceeds SGA. And the overpayment, which means that you have to reimburse Social Security, is $14,000, which is substantial. SSA just denied our request for reconsideration, which is not unusual, and reaffirmed the amount of overpayment they expect. Should I continue to go with an ALJ hearing? They have started work with DRCA and so that's the Department of Rehabilitation, and they want to know how we want to proceed. I would say first, get an attorney, first and foremost, because you are going to need an attorney. And yes, absolutely. I mean, so this is for informational purposes. Of course, I'm an attorney and I have to be careful that I'm not giving out legal advice, that you have to seek your own counsel. But is that worth challenging? Oh, yeah. 100%, but you will need counsel to help you with that and with receipts and all kinds of things. And so this is where it is absolutely worth challenging. Reconsideration being denied at the local level is not unusual. So I would say you go full speed ahead. And if in fact you lose at the ALJ level, which is a possibility, and you have to pay that back, that $14,000 back, you can also plead a hardship waiver. There's alternate pleadings. And so you will definitely need an attorney to move forward with that. But I would say, based on what you've reported, that is worth challenging. Let's see. This may be discussed, but since I don't want to lose my thought, please explain what happens if the person makes more than $2,000 after expenses and wants to do things the right way with their bank account. So again, remember I talked about not confusing SGA or income limits with $2,000 asset limits. So I just want to clarify what are they making? And I think what the person is asking is, if they still have more than $2,000 after they've paid all their expenses in their bank account. And so they're looking at running over resources by the first of the month. So there's different things you can do. You can prepay expenses like rent, cell phones, any cable or internet, that type of thing. You can do that. You can prepay a funeral, and you can make arrangements to have monthly payments for that. That is no fun to arrange, but it's inevitable for all of us, and so that's one of the other things that you can do. If you owe debt of any kind, whether it's a mortgage or anything like that, you can prepay that. But an ABLE account is your friend. And if you exceed that limit, then look at a first party special needs trust. In California, one of my top, well, they're a national organization, but I love CPT. I use CPT all the time. They're reasonable and very well run. And they've been around for, I think, about 25 years. So look at your resources to spend down, prepay, use an ABLE or a first party special needs trust. Is CalFresh or EBT an income counted in determining SSI eligibility? Well, it is not used to reduce your SSI income, but it is something that you must disclose. They do ask about it. And same thing with Section 8. Section 8 also wants to know where all of your resources come from. So it is not shocking to have to disclose that. That being said, I have seen that the benefit is being drastically reduced. Post-COVID, it was increased so that somebody who's on SSI can also get CalFresh. However, I've seen the value of that benefit go down substantially, and so it's still worth getting. But yes, you do have to disclose it. Is renting to your own child okay with the IRS? Well, sure. Absolutely. IRS doesn't care. But do you have to disclose it as income? Yes, you do have to disclose that as rental income on your tax return. And so that is something to take into consideration. But so I understand Kevin did a whole thing about income and shelter and all of that, how much would I recommend that you charge your child? So, one, you should have even a basic rental agreement. It still has to comply with all the rights and duties of a landlord to a tenant, which there are free forms online, frankly. Google's your friend here, and ChatGPT might be your friend as well, right? Free resources are good. And I would say the minimum would be about $350 a month to be able to maximize that 994. And yes, it is reportable income for the IRS. Can you remind us when we report our earned income to SSA? Yep, it's by the 10th day of the following month. So we're in the month of March right now. So anything you earn during the month of March will need to be reported by April 10th. And earnings in the month of April need to be reported by May 10th. Okay, so I know saying that when the deadline is a little bit of a mouthful. How careful do we need to be when reporting our earned income to SSA when a paycheck includes the last 5 days of the month and the first 5 days of the next month? Well, so that might be a reasonable accommodation to request of the employer that the pay period aligns more closely with SSA reporting, because I think that is a confusing thing for SSA. So if it, you know, that's a weird thing when a paycheck goes past the end of a month and into the beginning of the next. But again, I would think that that is a reasonable accommodation to
It does
request because of
happen though.
those.
Yeah, that's a good question.
Yeah, it is
Yeah,
a very good question.
yeah.
Um, it might be how to accommodate that. Let's say the employer is not willing to accommodate, which, you know, if you do it under the,
Thing.
the ADA, it's going to be
Yeah.
hard for them to say no. But I think that is a reasonable accommodation to request. In the meantime, until that takes place, just do a very careful letter of explanation that is uploaded that makes sure that they're not counting it twice, basically. In the Uber app, receipts are shown in a movie format, which is very difficult to submit anywhere as proof of IRWE. Can you recommend exactly how to get a printable Uber receipt? Oh, I don't remember. I just remember poking around in the app and being able to download it. I think screenshots also are helpful, but I know that we get the other is after every ride, you get an email. You get an
Mhm.
email receipt. And so what I do for that is I have a special folder so that I put those in and I arrange them by month so that I don't have to worry about it. And it's by year and then by month. And one little hint for if you're saving them electronically or whether you're saving them in Outlook or whatever your email format is, if you save it as year, then month, then day, instead of how we normally do it, month, day, year, then it will automatically put it in a chronological order. So otherwise, if you go 1/15/26, 2/15/26, it's all jumbled. Where everything by the 15th of the month is grouped together. So you don't want to do that. Go year, month, date, so that it sorts correctly. Have there been cuts in WIPA counselors? Well, Social Security was drastically impacted by COVID more than anything else. As far as the pending cuts and things that are happening with the administration, I have not seen that yet. But I don't really know the answer to that question. All I would say is, in general, anytime you're dealing with government agencies of any kind and benefits and resources that you're requesting, whether it's a school district you're doing an IEP and you're requesting services, regional center, DHHS, it doesn't matter. Social Security, they're all government agencies. And if you are requesting services, it is really a matter of out stubborning the system. And so if there are less resources or you get a reduction of your IHSS hours, any of that, I don't care what their budget is. We have to stop caring what their issue is and demand the services that you are entitled to. and they have to deliver to the best of their ability. And so, really, it becomes a matter of just sheer stubbornness. And I know that, like, this is something Felisa and I talked about. People are tired, right? And they get tired of fighting. I totally understand and respect that. And if you need help, ask for help. If you're too tired and you need a break, enroll help. And so that might entail a request. It might entail enrolling a family member or a friend, um, or it might mean writing a check. And so all of the above, just don't let them win because you're tired. And I understand being bone tired, but keep fighting. That's all I can say. Any chance that you can provide us with this California state supplement for SSI? Not off the top of my head, I don't remember what it is, but I think it's around $450 a month. I can look up the exact numbers. Daughter lives at home and gets the $994 and pays rent. I want her to get the max and was told that if I create a rental agreement and send a cover letter to SSA requesting the supplement, I cannot find anywhere what the amount is. It's Google search. I'll get that and we'll include that in the materials that you're emailed. Is that okay, Felisa? Is that a
Yes, yes,
okay?
that'd be
Great.
great. Yeah.
It's substantial. Go for it. You need to go for that for sure. Um, if some benefits or resources are paid for by regional center, can expenses for them be used to reduce countable income? That's a great question. One of the criteria is that you must pay for it. So if you're getting services and it's provided in full by another government agency, you cannot use that to reduce countable income. We used to have to pay for such services ourselves. Before we had an appeal with Regional Center, can we deduct those expenses as IRWEs? Sure, absolutely. Yep, I would include those absolutely. Will I do a similar program on SSDI? Perhaps if I'm requested to do so. I know it's a little bit different. We can talk about that. If a grandparent leaves a home to an adult child and they work, could they lose their SSI benefits? Well, a home is an exempt resource, so I would say no. They should be able to keep all of the above. Of course, special planning. One of the things to be considered is, can they manage the home? If they own the home on their own, do they need assistance managing that home? How do we get assistance for that? It could be regional center, could be IHSS, depending on whatever their disabilities are, whether they qualify for one or another. So that's, and then do they have the financial means to support that home, whether it's, taxes, maintenance, repairs, utilities, that type of thing. That's all part of the mix.
Yeah, hopefully as part of the future planning process that's been discussed before the event actually happens, right? Because it could leave someone having to do a
Mhm.
lot of extra trying to figure out how to make that work for the person that inherits the home. So,
Exactly.
yeah, that's why the future planning part's really important too.
Absolutely. And one of the things that we talk about is how to make it affordable. If the home doesn't come along with cash in the form of, say, a third party special needs trust, roommates. Roommates solve a variety of issues. Where do they pay their rent to? I would say a first party special needs trust. If they owe it to the individual, in other words, the home is left to the individual and not a special needs trust, then instead of paying rent to the individual that owns the home, set up a first party special needs trust to receive that income to help accumulate money safely so that you can pay for taxes, insurance, utilities,
And
maintenance, and
not affect
repairs.
that person's benefits, right?
That's
Yeah,
right.
yeah, that's
Hmm.
great. We have one
Exactly.
more question and then we're going to go ahead and wrap it up. But gosh, what a great session,
Absolutely.
Michelle. Yeah, so we've
Absolutely.
got Dawn has one more question.
Yep. As a recipient of SSI, does my daughter have an officially assigned SSA caseworker? No. So it just depends on what's going on. It's very regional. So your local SSA office is where all of the decisions are going to be made initially, including any kind of ask or request for reassessment. All of that happens at the local level, and then it gets escalated throughout their process. So if you do get an unfavorable letter, one that you disagree with, then you should make sure that you pay attention to your appeal rights and the timelines and deadlines. And of course, we want to make sure that anytime you get a request from any government agency, you sometimes it looks like junk mail or people, especially if a person with disabilities receives their own mail, they may not um, they may not always open their mail. And so making sure that you're checking in with them and making sure that they respond to any requests for information. I know Social Security loves to send out random letters that say,
Mhm.
hey, we're going to call you at this time, and they don't tell you why.
Yeah.
You just have to be available and pick up the phone when they decide to call you, and not know that, oh, I should have bank account information. Now, what is the purpose of this call? I think they do it on purpose. So just make sure that you're monitoring that person's mail so that you're requesting, you're fulfilling those requests in a timely way.
Yeah, so if that were to happen, I mean, I'm just assuming, say, for example, you're not available for their call or, whatever the letter said. So that could interrupt your benefits, right? That could be, how many times are they going to try to get a hold of you, right?
I think they do try twice. They do try at least once more if you're not available. And if the time and date that they've specified is not good for you and you've received that in advance, there is a number to call. There is a process for arranging for a different day and time because I'm my own daughter's rep payee. So I also she receives a copy, I receive a copy. And I just get random letters saying, hey, we're going to call you at this date and time. And sometimes I'm in a hearing or I'm at a conference or I can't be available then. So I always make sure that I respond and say, I can't do this date and time, pick
Well,
another
that's
one.
good to know. Yeah,
Mhm.
that's great. Well, thank you so much, Michelle. Dawn says in the comments, thank you so much. This has been amazing. I agree
Good.
with you 100%. Your presentation reconfirmed information, which I love to hear the same info consistently, which sometimes we don't, right? And provided me with new information. So thank you, Dawn, for that comment. And thank you everyone for joining us today. We hope to have Michelle back for more information in the future. Have a great day, everyone.
Thank you so much. It's been a treat.